Hello everyone and welcome to today's Mondac webinar in association with Walker's global fintech team as they reveal how innovation can work hand in hand with compliance for long-term global growth and how advisors must adapt to meet the sector's changing needs. My name is Dan Sampaio and I'm joined by a brilliant panel to take us through today's discussion. Rachel Nightingale is a partner in Walker's Bermuda office. Rachel has extensive experience on advising on corporate transactions such as M&A, take privates, initial public offerings, private equity investments and restructurings. In addition, Rachel also advises fintech clients on Bermuda's digital asset legal and regulatory framework. She often advises fintech businesses on their establishment in Bermuda, including advising on their corporate structuring, seed round investments and Bermuda's licensing framework. Iona Wright is a regulatory and risk advisory partner in Walker's BVI office with over 14 years experience working in the UK, the Cayman Islands and the BVI. She is a crypto regulation specialist and is a director of BVI Finance, a member of BVI Finance's Digital Assets Working Group, a steering committee member of the Virgin Islands Virtual Assets Association, founder of Walker's BVI Women in Fintech Network, and a member of the FSC's VASP Advisory Committee. Christopher Brett Young is a partner in Walker's Cayman Islands office. Chris focuses on corporate M&A transactions and investment funds and advises clients across a variety of industries, including fintech and digital assets. Chris specialises in a wide range of private equity matters, as well as corporate M&A deals, joint ventures, and equity capital market transactions. He regularly acts for private equity firms, major investment banks, fund managers, and Web3 entities on both fund formation and ongoing transactions. He also works on acquisitions, disposals, and restructures for public listed companies. Now, before I hand over to the panel to begin today's webinar, a quick housekeeping item. You are able to submit questions for the panel by typing them into the questions pane of the toolbar on the right-hand side of your page, and we will endeavour to answer as many of those questions as possible during our Q&A at the end, so please do get those in. You are also able to download materials using the toolbar on the right-hand side of your page. It's now my pleasure to hand you over to Rachel, Iona and Chris to begin. Thank you.
Hello all, thank you for joining us in today's presentation. We wanted to sort of give you an overview about the Walker's FinTech and Digital Assets team, as well as some of the trends, some of the changes we're seeing in the market, both in Cayman, BVI and Bermuda. We're very fortunate in Cayman, Bermuda, BVI and across the globe to have a truly global connected FinTech practice. And we have set up this practice in 2017. And we do pride ourselves on being experts in the industry. We also are very collaborative across the different offices, and we share knowledge, and we have various different expertise within the fintech and digital asset space, including those, the fund formation, M&A, even insolvency, finance, among others. We have Band 1 Chambers fintech practices in each of the jurisdictions in which we practice. And most importantly, we're involved in the local community that supports the crypto and fintech digital assets space. For example, in Cayman, we're a member of the BACHI, the Blockchain Association of the Cayman Islands. In Bermuda, the Bermuda Business Development Agency Technology Committee. And BVI, for example, the BVI Finance Digital Assets Working Group. It's also worth noting that as a firm, we are heavily focused on ensuring that those who practice in our departments have an ability to focus solely on the fintech practice if required. And we're very proud of what the client base that we've established over time, and it's been very carefully constructed to ensure that we have a robust practice. Next slide, please.
Great, thank you, Chris. So just to provide a little bit more detail on our Walker's Global FinTech Group before we move on to the meat of the presentation. As Chris touched on, we're experts in 6 laws. We are only talking to you about 3 of them today, and we cover 10 global offices with over 40 lawyers across the full spectrum of practice areas affecting FinTech businesses. We do represent a wide range of FinTech clients. Of course, we can't disclose many of them today, but they include founders, startups, global centralized exchanges and global decentralized exchanges, just to name some of a few. We've got a sample of our client list there, so the ones we can disclose. We recently worked on the Ripple and Hidden Road merger that was recently announced, so that was very exciting. We've got clients like Coinbase, the FTX Recovery Trust, which continues to work towards bringing back as much money as possible to the creditors, and of course many others. But I'm going to now hand over to Rachel, who will touch on the Bermuda fintech landscape and its digital assets framework.
Thanks, Iona. So this should give you a bit of a flavour of what exactly we're doing in the jurisdiction. So to go back slightly in time, the Bermuda government was very proactive at the outset, and in 2018 adopted a regulatory and licensing framework called the Digital Asset Business Act. Bermuda has a very well-respected regulator, having regulated reinsurance companies for over 50 years. So as a result, it attracted a lot of more of your fintech institutional style clients. So as a result of this early adoption, we saw some of the largest global cryptocurrency exchanges set up here, such as Circle, Coinbase, and Kraken, that are in the jurisdiction. Since then, we have also seen a big surge in respect of offering crypto asset derivatives as well, which falls under our licensing regime. This is predominantly due to the risk-based approach that our regulator takes, and I can talk to that briefly on the next slide. As we have an economy here of insurance, the regulator was keen to provide flexibility in our Insurance Act to encourage innovation. So as a result, we have a regulatory sandbox, so we can have innovative insurers and managers and intermediaries set up. This aligns with Bermuda's history of having innovative insurance products such as ILS and cat bonds. In addition, we have seen amendments to our banking legislation to provide for restricted banking licenses, effectively reducing some of the requirements needed for a full bank in order to attract asset sectors. We have also seen the Bermuda has been listing. We've seen and we big guidance on single currency pegged stable coins as well. So we can accommodate yield generating stable coins as well in the jurisdiction. Ultimately, hopefully what you get from this overview is that Bermuda has a very collaborative approach from our regulator and has tried to encourage fintech to see Bermuda as a suitable jurisdiction for regulation. Can you do the next slide, please? So here is an overview. I'm not going to do a deep dive on this presentation, but this is what our digital assets legal and regulatory framework looks like. We have our main piece of legislation, the Digital Asset Business Act 2018. The way that works is we have a license is required to conduct digital asset business activities. We have a really wide scope of activities that are covered by this. So it includes issuing, selling, redeeming tokens, operating an exchange, providing custodial wallet, derivative exchanges, and digital asset lending products. The view of the regulator in the jurisdiction is that if you're conducting digital assets, you are most likely going to be regulated, and so it's a very pro-regulation jurisdiction. Our regulator does take a risk-based approach, and what I mean by that is there's no complete ban on retail or limits on margin and leverage products that are prescribed. Instead, they look at the nature, scale, and complexity of your business and your risk management framework and discuss with you appropriate parameters based on that. We have three classes of licenses available. So a Class T, which is a test license, a sandbox license, and a full license. The idea and concept behind that is that you can be a startup in the jurisdiction, or you can be a fully fledged fintech business that's been operating for quite a number of years and set up here. Because we've been doing the licensing since 2018, the timings are quite reduced from when it was initially introduced, and so we can now get applications through in a 3 to 6 month time period. Briefly, there is a Digital Asset Issuance Act as well. So that's really our ICO legislation. This requires that you need to be authorised by a regulator to do issuances. However, there are exemptions for qualified investors. So the vast majority of activity under this is conducted through those exemptions. And also we have the ability to become what we call an accredited exchange and to operate as a self-regulated organisation as well. And the final point on the slide is just to note that because we have very clear guidelines from our regulator, we have sector-specific guidance on how to apply our AML ATF as well for digital assets in particular. So I'm going to hand over on landscape.
Great, thank you very much, Rachel. So I'm just going to touch on some of these points in relation to the BVI fintech landscape, but in short, we've got a very varied fintech landscape and there's lots of innovation in the BVI. The fintech businesses here can range from token issuers, stablecoin issuers, to virtual assets exchanges, custodians, market makers, proprietary traders, and also developers providing layer 1 and layer 2 blockchain scaling solutions. So the whole range really, including an increased uptick in DeFi or decentralized finance businesses. So the BVI has also become a go-to jurisdiction for token issuers in the Americas. This is because we've got regulatory certainty here that public token issuance is out of scope of the BVI VASP Act, which I'll touch on a little bit more later. As I noted, we've got the increasing interest from DeFi businesses such as decentralized exchanges or DEXs. And I know that one of the BVI regulators' top VASP priorities at the moment is considering how best to regulate DeFi. And I'll be touching a little bit more on that later too. We are also and have already seen strong interest in the BVI as a domicile for digital assets funds and tokenization of fund interests. We worked on BlackRock's high profile and also market first BVI tokenized money market fund, which was issued last year and continues to issue new share classes. I think, could we move to the next slide, please? Thank you. So just to cover briefly the BVI's legal and regulatory framework for fintech businesses, the BVI actually was pretty early in issuing its first virtual assets guidance, which came out in 2020. And that's surprisingly early actually for regulatory guidance in the virtual asset space. And what it did and what it continues to do is clarify the scope of BVI securities legislation vis-a-vis virtual assets. So actually from fairly early on, we've had great regulatory clarity in the BVI around, for example, whether crypto futures are in the scope of the securities legislation here, whether crypto options, different types of crypto derivatives, and other types of products fall within the scope of the securities legislation. So that's been really useful in clarifying the perimeter in the BVI from early on. The VASP Act came into force here on the 1st of February 2023, together with various application and AML guidance. Generally, the BVI regime is based on the FATF virtual assets framework, and it brought with it clarity on the regulatory perimeter here, which we've now had for several years. And travel rule guidance was also published at the end of last year. There was a transitional period in place for incumbent operators that ended on the 31st of July 2023, by which time either a VASP application had to be submitted or operations needed to cease. I understand that around 60 to 70 applications were submitted around that date, so more or less in line with the end of the transitional period. As such, there was a bit of a backlog here with the regulator, which they've been diligently working through, and we did have the first VASP approvals in Q1 last year, with 22 VASPs and counting approved so far, which is ahead or on a par with other Caribbean nations. The main area of concern for the regulator here is AML compliance, as it is in the other jurisdictions on this call. The VASPs, BVI VASPs have been in scope of AML regulations and the code in the BVI since the 1st of December 2022. And this also includes those VASPs whose applications are still pending determination by the FSC. Proprietary public token issuance is not in scope of the BVI VASP Act, and neither is virtual assets lending. That's one of the reasons why token issuance has become such a big business in the BVI. But I'm now going to hand over to Chris, who's going to cover the Cayman fintech landscape.
Thank you, Iona. So taking a step back, I think it's fair to say Cayman Islands, among other offshore jurisdictions, has been a leading offshore jurisdiction for investment funds for many years and a significant global financial center overall. So therefore, in line with this, we've seen, reflecting more recent global trends, our fintech team and generally the fintech market has been rapidly developing in the Cayman Islands. And in conjunction with government and other very, very well-resourced service providers in Cayman, the government introduced a virtual asset legislation to comply with global standards, and these were set out by the Financial Action Task Force, or the FATF as we know it. This was well ahead of other jurisdictions, including Dubai, UK, and Singapore in doing so. What that aimed to do was to ensure that we can move with the times, and the introduction of the Virtual Asset Service Providers Act in October 2020 was the start of this process. It introduced the registration regime, and eventually, now more recently, as we've seen, the changes which require the licensing of virtual asset service providers as recommended by the FATF. As a result, we are very fortunate to see the Cayman Islands, together with the US, as being the two top jurisdictions for crypto funds. As discussed earlier, we have a really thriving on-island community. As I say, it's very well resourced with very good service providers, and we're very fortunate to have a jurisdiction that I think is very cohesive and comes together to support each other. What we tend to see is a lot of the Cayman Islands entities used for a variety of purposes, but more importantly, crypto funds like VC funds, proprietary crypto trading vehicles, governance vehicles, including, for example, very popular is to see Cayman Islands foundations used as governance vehicles and used to legally wrap DAOs. Next slide, please. So taking a little bit more of a deeper dive into the Virtual Asset Service Providers Act, and I will say this presentation is very much to be high level. It's really more focused on the trends and what we're seeing as opposed to the actual legislation, which we're not here to bore you in the detail of that. But what we've seen is that essentially virtual asset services under the relevant legislation means the public sale of virtual assets or the business of transferring, exchanging, or the custody of virtual assets or providing financial services in connection with the public sale of these virtual assets, in each case on behalf of each other. And the focus is on the public sale in Cayman, not the private sale of the virtual assets, and that's where you require registration with SEMA. And these are changes that have been introduced more recently, and we are seeing a lot of clients very heavily focused on ensuring they're in compliance in this space. What we also see is that the legislation is moving with the times, and as a result, the consultation with government is ensuring that the jurisdiction remains very competitive. Next slide, please.
Great, thanks, Chris. So just to check that all of you are still with us, we've got a short poll because we thought it'd be interesting just to see the audience we've got today, see your thoughts on which regions you would consider when setting up a fintech business. So I think you should see a pop-up coming up on your screen with 5 choices: North America, Caribbean, LATAM, which is Latin America, EMEA, which is Europe, Middle East, and Asia, and the Asia Pacific. So we're really interested to see your polls, and it might be that we have some bias if this is a mainly America's attendance, maybe mainly Caribbean, it looks like.
Which means we're doing our job properly.
Exactly, that's music to our ears. Interesting that LATAM is still relatively low. We know that there's great strides being made in jurisdictions like El Salvador, for example, to push forward local legislation there. But yeah, North America, that's an interesting one, isn't it, Chris? I think you were speaking the other day on the whole concept of onshoring.
Absolutely. I mean, there's a lot of changes, as we know, with the Trump administration, and it's heavily pro-crypto, among other industries. As a result, we are seeing some inquiries from clients, but I think there's still a space for offshore jurisdictions in which to play a part. It's very important that offshore jurisdictions remain competitive, but also that they complement as opposed to compete with onshore jurisdictions like North America or other parts of Europe, LATAM, or Asia Pacific.
Absolutely. Yeah, yes, I think certainly we're of the view, and having spoken to, various onshore counsel, that there will always be a place for offshore in fintech structuring. So that's great news.
And looking at this poll, I think it looks like the Caribbean is a worthy choice here.
Absolutely. And Rachel, don't be offended, because I know Bermuda is not technically in the Caribbean.
It's absolutely fine. We get that all the time.
Absolutely. Brilliant. Okay, well, I think we can move on to the next slide then, please. So this has been my baby for a little while. I just want to touch on, as I alluded earlier, into a little bit more detail on DeFi arrangements or decentralized finance and the kind of key regulatory considerations around it. So this is now moving on to a discussion really about some themes that we're seeing. So moving away from the specific BVI, Cayman and Bermuda regulatory regimes and the fintech landscapes, and now moving more into discussion of some key themes. And this one really is focused around decentralized finance or DeFi. So one of the key issues that as a regulatory practitioner I see in the space is the question as to who has control or sufficient influence in a decentralized finance arrangement, particularly when often when you're talking to the founders, the owners, the people seeking legal advice from us, they say, well, it's technology, it's a smart contract. It may have been put in place by a coder initially, but it then runs autonomously. We have no control over it. And it's self-learning, and aside from editing occasionally, really it's the software that is doing the work here. So international standard setting bodies like the FATF and IOSCO are clear that the intention is not to regulate the underlying software or technology. So no regulators globally are seeking to do that. That's not the end game. But where we are at the moment globally is that where you've got creators, owners, operators, or other persons who maintain control or sufficient influence over a DeFi arrangement that should be regulated, they may well fall under the definition of a VASP, where they're providing or actively facilitating VASP services, even where other parties play a role in the service or portions of the process are automated. So I think, as I talk through this slide, remember those concepts of kind of control and sufficient influence. What they mean is probably a whole other webinar altogether, but at least if you take away those broad concepts, that'll be a good takeaway point. So in terms of what point does a DeFi platform fall within scope of regulation? So in order to answer this question, you do need a technical understanding of the DeFi platform or arrangement itself. Different components of the arrangement may be housed in different jurisdictions, and they may use different legal structures. So this is very common in a DEX, for example, or decentralized exchange. You often may have two or three different components: the front end, which will be the user interface, the on-chain component, which might be structured, have a legal wrapper like a foundation, and will steward the protocol, and then an off-chain engine, which will literally be a computer that does order matching sitting somewhere else. So all three of those components could be in entirely different jurisdictions. So as a result, you have to think about the territorial perimeter when you're doing a DeFi analysis. You need to understand where those different components are and which jurisdictions they sit in, and also the legal wrappers that they're using. And it may well be that not all of the elements of the DeFi arrangement fall within scope of the jurisdiction that you're practicing or that you sit in. In addition, it's important to think about Is the DeFi arrangement set up as a business? So is it a commercial enterprise where users are paying fees, or where the ultimate owners or those persons that control or have sufficient influence are profiting from the arrangement? That's an important part of a regulatory analysis in relation to a DeFi structure. Asset types are important as well. Usually we are dealing with virtual assets in these scenarios, but there are certain types of asset classes that do fall with that, that may fall outside of scope. So for example, if you have a closed loop item, like a good example used is often air miles that have no value outside the protocol itself. Those are unlikely to be virtual assets, so will fall outside of scope. Chris did touch briefly on the types of activities that tend to be regulated in this space. So it's important to think about that. Clearly, with a DEX, they're likely to be doing the virtual asset services of exchange, but other types of businesses may be involved in transfer, safekeeping, so kind of custody-like activities, or even the provision of financial services that are related to an issuer's offer or sale of virtual assets. So an initial coin offering, or an ICO, as they're often termed. It's important as well to think about potential exemptions. So in a DeFi situation, these would mainly center around the provision of ancillary services or ancillary infrastructure, or potentially the development or selling of software that does not go as far as to facilitate VASP activities. And then finally, we loop back to the concepts of control and sufficient influence. It's a complex one because usually these arrangements are set up deliberately to avoid the conclusion that any one person has got control or sufficient influence. So exactly what this consists of in a jurisdiction by jurisdiction basis is likely to become more nuanced as global consensus is reached on the regulation of DeFi. And then I'll just wrap up by thinking a little bit about how DeFi should be regulated. So this is the question of the day really at the moment. Various jurisdictions have got regulatory sandboxes, including the BVI. This is a useful tool for the regulator to observe and limit customer risk, but doesn't necessarily provide the tools always for what regulation should look like once the entity comes out of the sandbox. So in that sense, it's still important to think about innovative regulatory approaches. I'm aware that the BMA in Bermuda has put out a policy kind of paper on the concept of embedded supervision, which is where you build compliance into the technology itself, and that would allow for automated monitoring of compliance within a regulatory framework. So an interesting and quite exciting example is the potential for regulatory nodes sitting in a smart contract, which would have oversight of the smart contract and will be able to monitor its compliance with various VASP conditions, for example. I think the probably where we're most likely to end up, though, in this landscape is looking towards global regulatory convergence. This may well take some time. So it's important for regulators to be flexible and also commercial with their approaches. So looking to publish guidelines rather than amend primary legislation in this space. And of course, collaboration between the industry, developers, and the regulators is really key to embracing innovation while ensuring that consumers are still protected. So on that note, I'm going to hand over to Chris, who is going to speak to how client expectations have evolved offshore.
Thank you, Iona. I think that's a very good segue to really that everything's so well connected in this space. I think the main point to start with here is that the digital assets sector has matured considerably. It's seen the ups and downs like any market would. It's a new space, I think, even with the time it's been developing. But our clients are now seeking well-regulated solutions rather than a quick fix. And that's the importance, and that's where Walkers, I think, really comes to the fore. we appreciate, as do a lot of our clients, that regulation remains central to the conversations. I don't purport to be a pure regulatory lawyer, and that's why I'm very, very proud to be part of a fintech group that has very strong regulation, very strong regulators in terms of the regulatory lawyers, I should say. What we're seeing is a market where essentially innovation moves hand in hand with compliance, and where we see a governance and cross-border awareness. In other words, they're critical to the long-term growth of this industry. And it's important, I think, clients now prioritize this clarity, the compliance, and long-term credibility. I think it's very clear to say that the nature of digital assets, fintech, cryptocurrency, and other sort of similar Web3 related industries are not just a flash in the pan. They're here to stay. They're here to be long-term and to be well regulated. And as a result, I think it's fair to say that clients are proactively choosing jurisdictions which offer that certainty, whether it's for this purpose of this presentation, Cayman, BVI, Bermuda. We're also lucky that you have offices across other parts of the world, including Jersey and Guernsey, where we're seeing a lot in this space. As I said before, it's very important that the jurisdictions complement each other, and we're very lucky to be able to work between the different teams within the different offices at Walkers, but also that we support and complement the resources of onshore. And therefore, what we see particularly in Cayman is an ability for clients to establish both US and offshore entities to balance tax neutrality and the operational needs of businesses forever changing. What we're also seeing, and not trying to get into the trends piece, but essentially institutional clients are starting to enter the digital asset space, and they're increasingly sophisticated with their expectations. Their priorities are very, very clear. It's scale, compliance, and credibility. And I think it's fair to say that our clients are looking for legal advisors among other service providers to deliver all three of those points. It's also about market positioning, first mover advantage, market presence, and also building the experience throughout the process and driving that commercial outcome through the experience. And that's where we're very lucky in Cayman to, among other offices of Walkers, to have that credibility and to have that team established since 2017. I think also clients are looking for legal advisors who can provide legal advice within the black letter of the law, but also strategic partners, those that can help them essentially handle the complexity, scale globally, and also, most importantly, safeguard their business and reputation and ensure that security and privacy remain key. I think the final point just to leave you with is that innovation and compliance are not opposites. And today, compliance is part of this strategy to ensure that our clients receive a competitive advantage. And what we're seeing, particularly in Cayman, among other jurisdictions, is the ability for consultation to be fed into governments and regulatory bodies to ensure that laws, policies, and procedures move in the right ways, that they are ensuring that these offshore jurisdictions as a whole remain business friendly, cost effective, and efficient. And that's very important to ensure the long-term continuity of the jurisdictions offshore, but also the market generally. Thank you. Next slide.
Okay, so now we're going to do a quick poll on what are the key trends you are seeing in your jurisdiction. So hopefully there'll be some answers for you to select. So we'll see what everyone's been up to. So please go ahead and vote. Ooh, okay. Oh, quite a range between everyone, I think.
Encouraged to see DeFi platforms there, so hopefully I wasn't boring everyone.
I think also it's interesting to see artificial intelligence coming into the piece. Some will argue it's at odds to the nature of cryptocurrency, but I think in many ways it's very complementary, and together they can sort of build a real regime that promotes the future of this area.
Yeah, I mean, especially seeing the products coming out in RegTech, etc., with artificial intelligence. It's super interesting to see how that's going to develop and adapt and change the environment we see in terms of how we advise clients.
Exactly. And the other thing that's interesting is that the tokenization of real world assets doesn't seem to be as high as I may have thought, but it's certainly a trend, and Rachel will speak to this, that we are typically seeing offshore, and I think it's going to be one that's going to become more and more present in this space.
Yeah, exactly. Okay, so we had AI as the winner. So on to the next slide. I'll give you an overview of what we're seeing as key trends in the offshore world. So something we've seen, and I think it will definitely continue, is stablecoin issuances. Obviously, with the recent introduction of talking about the Genius Act, we'll see how that impacts offshore. But ultimately, I don't think stablecoins are going anywhere with their price stability and global accessibility. I definitely see that as continuing for offshore. The attraction often offshore is that we do have certainty. We've all in our jurisdictions been doing stablecoin issuances for quite a while now. And we do have the flexibility of corporate vehicles that can be used. So, for example, in my jurisdiction in Bermuda, we often use things like segregated account company vehicles to segregate reserves for stablecoin issuances. So very interesting to see that continuing to develop. As Chris has already mentioned, tokenization of real world assets, we have seen that across all our jurisdictions, and really seeing a wide variety in that area. So we've seen things such as issuer of those tokens, exchanges that sell those tokens, wrappers, legal wrappers for those token offerings. So again, I think with being offshore, we do have a number of corporate vehicles that can be used, legal wrappers and documentation for tokenization of those real world assets. Obviously, a lot of us in our jurisdictions have a big funds base. So again, that's attracted those investment managers to look at doing those product offerings offshore as well. Digital asset lending products and services. I would expect to see that to continue to take off in offshore jurisdictions. I think that's more of a recent one that started in the last few years, particularly seeing product and service offerings with loans against your crypto. So for those who are wanting to hold their Bitcoin but maximize the potential liquidity in that cryptocurrency, then digital asset lending and services and products are obviously very attractive. We do have in Bermuda, we have a licensed digital asset lending platform as well. So we have seen that be integrated into our regulatory regime as well. Finally, just generally more integrated financial services. So digital banking, I know Cayman have had some success with digital banking providers, and also seeing payment service providers as well move to jurisdictions. I think generally we're seeing the market move to more embedded financial at scale. So your Ubers, your Shopify, card issuances, Google Pay. So I definitely see more innovation coming down the line on there, and often offshore is quite helpful in testing out those products and models. The thing to just reflect on really with key trends in offshore is that as an offshore jurisdiction, we're often very nimble. As Chris was describing at the beginning, Walkers is very well represented on a number of panels and industry expert groups. So we do have the ability to be able to discuss directly with the relevant legislators and regulators about key trends that are coming to the jurisdiction. I know especially in my jurisdiction, I've seen the amendments to our Digital Asset Business Act on a year-on-year basis to really reflect those key trends that are coming out and to make sure that they still remain present and relative to what exactly is going on in the fintech industry. And we've even seen that with a recent consultation paper on payment service provider, for example, looking to do a specific license for traditional and non-traditional assets together. Because I do think the more we see fintech widely adopted, the more we've seen the type of product offering going across various regulatory or licensing regimes as a result. And so it'll be interesting to see how offshore adapts to that in order to ensure that they're still attracting the clarity for potential fintechs who are looking to set up in their jurisdiction. So I think that is the the bulk of our presentation and what we wanted to talk to you all about today. So we're going to hand over now for some questions and answers. And I think there's an opportunity to put some questions in the chat.
And I think also, just to jump in there, one other thing we're seeing in the press more recently is the corporate activity. It's the IPOs of digital asset entities. It's the corporate M&A activity. It's the even SPACs or de-SPACs. So it's just that there's a lot going on in this space, and we're very lucky that the offshore jurisdictions play a pivotal part in this, particularly as the lawyers.
Excellent. Thank you very much. Brilliant. And just before we move to our Q&A session, I want to say a big thank you to our panelists today for your insights. A lot of information you were able to provide us today. So thank you very much for that. We have a few questions in. Anybody in the audience, if you do have a question, please do send us in. We have plenty of time now to get those answered. I will start with these pre-submitted questions that we've had already sent in. Rachel, in your experience, what aspects of setting up offshore structures do clients typically find the most challenging?
Yeah, I mean, to be honest, I think one of the key points for clients to consider is really finding a jurisdiction that fits for them. I definitely think I've experienced with this industry is that there tends to be a big move to one jurisdiction, like when it becomes popular. But that doesn't necessarily mean it will fit what you need from your business perspective. So I'd really encourage anyone to do research in the offshore jurisdictions they're looking to view. We, for example, will provide jurisdictional comparisons across our various areas of expertise and jurisdictions, because as hopefully you've got a flavour from this presentation, we all do different things in each jurisdiction and they are not always appropriate and one size fits all. So definitely would say that often the choice and making the right choice so that you don't have troubles down the line is probably one of my biggest suggestions. And obviously getting good service providers to help you with setting up in the jurisdiction is always useful, because you can utilise their contacts in the jurisdiction as well.
Excellent. Thank you for that, Rachel. Iona, you gave us an overview of some of the key issues with regulating the DeFi sector earlier. Are institutional players engaging meaningfully with DeFi, or are they still waiting for regulatory clarity and better risk controls?
Thanks, Dan. So I think there's certainly growing institutional investment and engagement in crypto as a whole. Obviously, there's big ticket deals like the ones I mentioned earlier, Ripple Hidden Road merger, BlackRock setting up its tokenized money market fund, of course, the tethers of this world. So there's a lot of institutional engagement. Certainly, I think in the kind of more centralized space. So I think DeFi though is still lagging a little bit behind, and that's really likely because institutional players that are used to rigorous AML compliance and also operating within the guardrails of global regulatory regimes still remain cautious of DeFi involvement, because it is a movable feast in terms of how to regulate it, which I touched on earlier. And I think really the key to squaring this circle and encouraging greater institutional investment in DeFi will be for DeFi protocols to set up and, where it's appropriate, get regulated under commercial but robust regulatory regimes like the ones we've been discussing today.
Brilliant. Thank you, Iona. And a question for Chris. Do you see there to be future challenges and concerns for offshore jurisdictions in terms of the number of fintech transactions, given that the particular focus and objective of the Trump administration in developing the US into a crypto hub of the world?
Dan, that's an interesting question. I think there's definitely challenges. I don't see concerns. I think, as I said, we as offshore jurisdictions are very mindful of ensuring that we are complementary and not competitive with onshore, particularly the US, which is a big feeder of work in this part of the world. I think it's important, though, that the community, the fintech communities, whether it's in Cayman, BVI, or Bermuda in this case, can move with the times, that the industry can stay together, they can consult in a collaborative way. and that the law can provide certainty, but also move with the times. It's a very dynamic and evolving market. And I think it's interesting to see what's going on in the US. We've been very lucky to attend various conferences and speak on various panels actually on the topic of onshoring, as Iona and Rachel have sort of spoken about before. But it is important that we continue to consult with the government and ensure that our clients are provided with certainty, that regulation is key, and that we adopt a measured approach. And I should also just say, and this is more from a Cayman perspective, I'm very proud to see the community within the Cayman Islands to be one that is a collaborative community, but also one that has very strong service providers. And I think the same for quite a few of the offshore jurisdictions in which Walkers operates. And we're very lucky to have very good working relationships with those service providers who can share knowledge in the right ways. And also, that being said, we're very lucky to have very strong clients who in many ways are at the forefront of what they're doing. They adapt with the times, and in many ways they are the ones leading this space and assisting to drive forward this revolution that we're seeing.
Excellent, thank you, Chris. Now, this is a question that I think could be interesting for all of you, but I'll put it to Iona first. Offshore jurisdictions licenses cover which activities?
Thanks, Dan. So as I briefly touched on earlier, there are quite a lot of similarities in relation to the activities that tend to be regulated across certainly the offshore jurisdictions, and I suspect globally as well. But the activities of exchange I was talking about earlier, so exchange between virtual assets themselves, or exchange between fiat and virtual assets, which you often see either in a centralized exchange or a decentralized exchange structure. Those are regulated, and I think tend to be across most jurisdictions globally, certainly in the BVI, Bermuda and the Cayman Islands. In addition, there's also the activities of transfer of virtual assets and safekeeping and/or administration of virtual assets. A lot of these are custody-like activities. So where you've got a entity providing, for example, hosted wallet services, they would likely fall within the scope of these activities. Some exchanges as well, usually the centralized exchanges rather than DEXs, would also be acting as custodians in carrying out their activities. So we'd often see those permission suites. Separately, you've got a kind of catch-all type of activity, which is the provision of financial services related to an issuer's offer or sale of virtual assets. This is really to do with ICO style facilitation or support. So initial coin offering support, whether it's distribution, any kind of entity acting as an intermediary to help distribute, promote, or sell an issuer's virtual assets is likely to be captured. There are some nuances between certainly the offshore regimes and likely more globally as well. Chris mentioned earlier the fact that public issuance of virtual assets is captured within the Cayman Islands regulation. It's not in the BVI, for example, and I believe it also is in Bermuda. Crypto lending, so digital assets lending activities, is captured in certain jurisdictions like Bermuda as well. Chris, Rachel, if I said anything in vain, do shout out.
No, that's fine. Yeah, so I would just say the way Bermuda has continually updated their Digital Asset Business Act is to continually widen the scope. So effectively, the aim of it is to really capture every activity. So as I mentioned, issuing, selling, redeeming coins and tokens, custodial wallets, exchanges, digital asset lending, trading, like all of these activities. There are certain exemptions that are appropriate, really predominantly where you are not interacting with a third party. So that's kind of how our exemptions do work in terms of the Digital Asset Business Act. The one luxury we do have is that if there is any question about whether you fall under that regulation or not, we do have the opportunity to speak directly to our regulator so we can always seek clarity on how that interpretation is working. I would say that we're a very experienced team in the jurisdiction, and we often have had those conversations in the past and understand how they will be interpreted. But again, that's a nice opportunity to have that certainty and clarity and being able to speak directly with the regulator.
Brilliant. Thank you, Rachel, and thank you, Iona. Regarding actively facilitating, it's an interesting concept in relation to efforts to regulate DeFi. What are your thoughts in terms of the liability or responsibility of the coder developer towards the DeFi DEX protocol? How do you envisage them being regulated if they meet the criteria of actively facilitating the trade exchange on behalf of users?
Thanks, Dan. I think I might take this one, given the DeFi angle. It's a really good question, and to be quite frank, the global landscape has not settled on this. Currently, I tend to advise on a risk spectrum when you get into the territory of active facilitation, and usually try to see if there's ways to structure the business so there's less active facilitation, or the business kind of takes a view and decides to either move forward to get regulated, or, to be frank, takes the regulatory risk on the chin. It's a difficult one at the moment. I think we will likely see more clarity as global guidance in this sector evolves, particularly if we end up going down some of the more innovative routes, like embedded supervision that I spoke about earlier. Then it may well be more about looking at monitoring the underlying technology rather than trying to focus on a particular person to point at and say you're controlling, you're actively facilitating, or you have sufficient influence. Ultimately, though, the buck does need to stop with a person, whether that's a natural or legal person, because in the event anything goes wrong, you need someone to sue. So DeFi, I think, should be thinking about making sure they've got appropriate legal wrappers in appropriate jurisdictions that will help shield liability. You wouldn't want to have a situation where the founder, a coder, a consultant, ends up being personally sued because of something that's gone wrong in the DeFi structure. Usually, it's relatively clear if a DeFi arrangement is doing something that needs to be regulated. So, for example, a DEX, depending on the components and where they are sitting, if they fall within the regulatory perimeter of a jurisdiction, the odds are, certainly if they're doing the exchange activities there, they will need to be regulated. It's just a question of, do you have a legal wrapper that you can point to in terms of this is the entity that controls it, this is the entity that has sufficient influence. So I think it's important for DeFi to think about liability shields to make sure that they have, thought from the beginning about their structures, because ultimately it's going to be hard to avoid regulation forever in this space. So it's better to future-proof these businesses and, make sure that they're set up in a commercial and also forward-thinking manner.
Excellent, thank you for that, Iona. And I don't know, Chris or Rachel, if you have any additional thoughts or comments on that question as well.
I would just say, from a Bermuda perspective, I know our regulator is going through the process of considering how to regulate DeFi specifically, and they are currently going through an internal process of how to do that, because they're obviously aware that it's something the industry is moving towards. So I think from our perspective, it will be something the regulator is definitely open to doing. It's just they need to come up with the rules and parameters around how they will decide to do that. So it's a wait and see for us at the moment in Bermuda.
Great, excellent. Thank you.
And just jumping, I just saw a question on registration. How long does it typically take to get licensed with SEMA? What I will say is it's obviously fact specific, and it's quite dependent on the application. In other words, whether it's a full license or registration, and how complex the ownership structure is, how many UBOs there are. What I will say is sort of a very rough estimate is we will move as quickly as we can once we can collate the documents. But I think within sort of 3 to 4 months is, from submission is somewhat reasonable here. Obviously, it's a moving piece.
Excellent, thank you, Chris. And I can see that there are some really interesting questions that have been sent in. So thank you for all of those questions, whether they were answered or not answered. What I will say is we will be sending Chris, Iona, Rachel's contact information to you after this. So I do encourage you to get in touch if you've sent in a question that we've not had time to answer. But just looking at the time now, there are a few pieces I want to mention at the end of today's webinar, and I wanted to leave our presenters a little bit of time to answer this question before we finish. So we'll move to finish with this question for all three of our speakers today. And it's this: if you were to leave your audience with one key message coming from this presentation, what is the most important consideration to be aware of in this space going forward? Perhaps, Chris, I can begin with you.
Sure. I think I could go on forever on this, but I think it goes to some of the discussion we've had earlier. It's about clarity and regulation, and that we don't need to rush into knee-jerk reactions. It's important that we build out this space and continue to build out this space in a way that ensures continuity for the industry, and one which supports and complements our trusted partners, and that means other parts of the world, but also the community in which we operate.
Thanks, Chris. Rachel.
Yeah, I think I would say make sure you, as I was discussing before, make sure you understand the jurisdiction you're moving to, the service providers there. All of our jurisdictions have been doing this for a number of years, so as a result, we have the infrastructure possible to be able to do often what it is you would like to establish a business. So I would just say make sure you do your research and make sure you reach out to service providers who can really help you and assist, and are definitely experts in the field and do this day in and day out, because it's very easy to do blanket advice and without knowing the true impact of that advice.
Excellent, thank you, Rachel. And Iona, I'll hand over to you.
Thanks, Anne. It's always hard to do the concluding remark, but I suppose we've probably got a range of people listening to this. Crypto can be a bit mind-boggling to begin with, but what I would urge is to educate yourself, learn the acronyms, and don't be afraid to go to the specialist advisors when you need it. And also for the regulators that I know are listening on this call, collaboration with the industry and with the tech founders themselves is key to moving forward in a commercial and also kind of safe way in this space, so that we don't stifle innovation. And as I think those of you that are listening can tell, there's a huge amount of potential in fintech, and it's going to be exciting to explore that together.
Excellent, thank you very much, Iona. I think that's a fantastic place to end today's presentation. So once again, thank you so much to our speakers for giving us their time and their insights today. It's been fascinating spending an hour with you this afternoon or this morning, depending on where you are. So thank you very much. I hope that we can have you back again soon. To our audience, you can see our speakers' information in front of you, or you were just able to. We will be sending you their contact information after the session, along with the slides and some links, some important links which have been shared with you today, and some materials which you will be able to download as well. I will just mention that we have a short survey that will pop up once you leave today's session. If you could take 30 to 60 seconds to fill that out, that would be incredibly helpful. So once again, thank you very much to our speakers, and thank you to our audience for being with us today. I hope you all have a lovely rest of your day. Thank you and goodbye.